Well, the big news in cryptocurrency land is that America's corporate regulator has approved the listing of several Bitcoin exchange-traded funds on the US share market, and in what's been hailed as a win for Bitcoin's mainstream adoption. For months, there's been a lot of speculation this would be happening, which has led to the price of the digital currency jumping to its highest level in nearly 2 years at around $46,500 US. But what does this all mean? To help us break this down, let's bring in Professor Chris Berg from the RMIT Blockchain Innovation Lab. Chris, these Bitcoin ETFs, they're supposed to be more of a safe, secure way for people to invest in something that's inherently volatile and risky. Could you explain the concept and why this is a big deal?
Yeah, no, it is a really significant deal. Lots of financial assets are, of course, volatile. All financial assets have risk, but there's some particular challenges with mainstream investors who want to hold some of these assets like Bitcoin or other cryptocurrencies, but may not want to learn all about how cryptocurrencies work under the hood. And so an ETF or an exchange traded fund allows investors to get access to a complex asset, quite a technical and complex asset, without having to learn all about self-custody, or without having to interact directly with blockchains and so forth. So this is a very powerful product for mainstream adoption or mainstream investor adoption of cryptocurrencies, starting with Bitcoin. But I expect in coming months or years that there will be other cryptocurrency assets like Ethereum that will also be brought onto ETF status.
So Chris, why has the US corporate regulator finally approved these funds, even though they've been very much against the idea for the past decade? For instance, I'll bring up this statement here. The SEC chairman, Gary Gensler, put out this strongly worded statement saying US authorities do not endorse Bitcoin. And he's reminding people that Bitcoin is volatile, used for speculation, and has been associated with money laundering, terrorist financing, and other crimes.
Well, it's actually an extraordinary statement. I guess the real question to my mind is, why has it taken so long for Bitcoin to be approved as a exchange traded fund? The answer to that is just an unremitting hostility, particularly from the Securities and Exchange Commission, but more generally from the US administration to cryptocurrency and Bitcoin. In fact, the origins of this approval don't date back to a change of heart at the SEC. They date to a recognition by the US courts that the SEC has been somewhat hypocritical in allowing the existence of Bitcoin futures markets, but opposed to Bitcoin spot ETF markets as well. So there's been this battle between the SEC regulator and the court system in the United States that has exposed some really deep incoherence in US public policy. Nonetheless, I think that is an ongoing problem that is stretched across lots of different cryptocurrency markets. But this is unambiguously a win for the consumers and investors who want to get access to this really interesting and fascinating new financial asset.
And what will this mean for crypto in Australia? Can we expect to see ASIC, our corporate regulator, make a similar announcement?
Well, this Australian Securities Exchange has actually been foreshadowing for quite some time that it's going to be accepting Bitcoin ETFs for Australians as well. ASIC has been very involved in those discussions too. So I suspect quite quickly we're going to see, or at least in the next couple of months, or certainly in the next half year, we're going to see the onboarding of a Bitcoin ETF in Australia and available to Australian consumers as well. That's going to be a big change again for the availability of this asset to mainstream investors who don't want to get involved directly with cryptocurrency exchanges or hardware wallets or private keys or any of those complex things that I'm really interested in, but not every investor wants to be involved in.
Professor Chris Berg, thank you very much for breaking this down for us.
Thank you so much.